What's good? It's your boy E coming at you again with another one, real quick from Finance Solutions. And today in the markets, today is the fourth, October 4th, 2022. Was a kind of an interesting day. If you remember yesterday, basically today, this was yesterday right here. So we had a bear market rally, like the ones I've been referring to and spoke about. That was yesterday. Today was kind of interesting as well. Looked like the rally's basically continuing. And like I said, it basically looks like this bear market rallying is continuing. If you look here, it looks like the SPY actually gapped up during after hours, or actually pre-market. No, after hours, 8 p.m. Yeah, so it gapped up last night. Couple handles here. I mean, from what, 366.50s all the way up to what's that, 372.14. So a decent gap up. I mean, so whoever was brave enough to hold on and swing their positions overnight, I commend you. Nice play there, right? I mean, I wasn't brave enough to do that, but pretty sure there were people that bought the dip, maybe thinking that the bottoms are in, and swing their positions on up until today. And from the looks of it, it paid off. But to go ahead and zero in today and the price action today, basically the SPY looking like this. All right, so it's still up. I mean, it's been front side since freaking last night, basically. This is the previous closed line right here. It gapped up overnight. It's been front side. I mean, I guess the bear market rally continues here, and the SPY opened up, and I was watching the price action, and it basically continued running up, and it looks like it's bouncing right now. Actually, I mean, I was done trading within like an hour or so after the markets opened. Like from the first 10 or 15 minutes, I stuck to my rules and didn't even trade. I went ahead and got in on the action. And today I kind of switched it up because I had been actually trading Apple for like a week straight, basically. All from last week until this week. And I traded Apple yesterday. It kind of yesterday was a success overall, you feel me? But I was thrown for a loop when the markets basically took off, because my thesis and the general consensus is that we're in a bear market. So, like I was saying on one of my previous videos, I'm really not like in a bear market where we know the direction is down. I'm really not trying to buy any dips at all. I'm more focused on selling the rips. Yeah, more focused on selling the rips. And again, if we go to yesterday, that got me in trouble yesterday, actually, because I'm trying to sell rips in a bullish market, and I was successful off the open a little bit. Like I already went over it yesterday. I was successful, but then the market just kept going up, and I realized that I was basically fighting the trend. And again, I mean, I know it's getting old, but I just can't stress it enough that the trend is your friend. So once I realized that I was fighting the trend, I flipped long and was able to go ahead and make yesterday a success, and ended up in the green. And then here's the Apple chart from today, the 1 minute chart. I mean, looks like Apple actually ran, as I'm looking back in hindsight. Let's zoom in a little bit here. Looks like Apple ran into some trouble today. So I mean, it's kind of a good thing that I didn't trade it, because look at all this chop right here. It's just chopping around sideways for like right here in this area. We're just chopping around sideways, basically. So I'm kind of glad I didn't participate in that thing. I would have, got chopped up, basically. I would have got chopped up in that for sure. Right here, that little chop city right there. Yeah, is what? Look at all that selling that came in on the first candle. 1.7 million That's just like the candle from yesterday, actually. If I remember correctly, yesterday the first candle on Apple was a candle of indecision, right? Remember, we seen all the selling pressure come in, but it was a candle of indecision, meaning when it tried to sell off, buyers came in and bought it back up. When it tried to run up, sellers came in and brought it back down. Let's go look at that first candle from yesterday right here. Look, same exact thing. Look, 1.8 million instead of 1.7, but the same kind of candle and almost the same setup, except for it bounced off of VWAP and I sold the rip right there. I grabbed puts right there, but look at those patterns. See, like this is the stuff that you can catch and recognize only by spending time in the markets and gaining that experience and screen time. You feel me? So look, 1.8 million, 1.7 million, same exact candle. So again, that's the you have to be in the markets to see this stuff, and you have to put in the work. Yeah, it's easy to get lucky and make money in the stock market, but what isn't easy is maintaining your capital, it's keeping your money. All right, and again, it just comes with experience. All right. So again, that's a prime example of why screen time is so important. Looking at Apple, yeah, we did get a nice little bounce, after the morning washout here. Looks like it created like a intraday support. And you could see, like, I mean, when in doubt, zoom out, right? Look, this is exactly where it gapped up overnight. It gapped up to this level right here, right? And now that basically that level has acted as support all day, damn near. Look, came down, tried to sell off, bounced, sold off a little bit here to that level, consolidated, bounced again, and then off the open, indecision, but it basically consolidated on this level. So that's why levels are so important. And again, it basically maintained above that level all day, except for right here at about 130, 120, 125, 130. And maintained all day, grinded, consolidated. And I mean, even this move right here, you probably could have got in. Like this consolidation right here on the support where it gapped up to, and then, seeing that it is holding this level and not breaking down, I probably would have, if I didn't have this overall bearish outlook, would have probably made me think it was okay to go ahead and buy this dip just for a quick scalp to the upside. And it would have worked out because, 144 to what? 145.80s, 146. That's a $2 move. That's decent. That's decent. But, after that, yeah, consolidated, kept going up higher. I guess buyers ran out of steam a little bit right here. But notice, came down to the 9 EMA and bounced. I guess it found the top of the range up here. And as you can see, it would have been looking weak to me. I mean, this candle is good, and then this right here. But then as I'm watching it, I'm seeing these wicks. So, yeah, we're heading to the upside, but because of the wicks, because once it hit that high of day, all I seen is wicks, and it was never able to get back above it. It probably would have gave me a more of a bearish outlook on it. And it did downtrend for downtrended a little bit for a few candles there, for like an hour or so. But it was able to kind of break out of this downtrend and cross over the 9 and VWAP and also my short-term SMA. But again, we're seeing all these wicks. So what these wicks mean is people are selling into the move. That means people are basically just trading it. They're just like day traders or swing traders or whatever, more than likely day traders. They're just playing the bounces. Because look, bounce tries to go up. They're selling into it, into the bounce. That's why you see the wick. Sell off, come back, consolidate a little bit, consolidate under VWAP. You probably had some people putting on some shorts or, off of VWAP and fading it. And then you have people bouncing it off of this level and then taking profits. All right. And eventually you see Apple did go ahead and fade and break down. And look, wick, people sold and, faded it down, basically selling the rip, like I have been saying. But then Apple did sell off, and I guess it found the bottom here. Let's zoom out and see if that level coincides with anything. Basically right here. I mean, yeah. Off the open, Apple just tanked. And look, the same little candle of indecision off the open. Look at that. So I mean that's just something to keep in mind. But look, that's where that level coincides with. Although a few days ago, it sold off hard and then basically tried to bounce, couldn't bounce. Wick on top, failed, and then this level acted as resistance. Okay, and this was on the 29th. These levels, you have to pay attention to your levels. So we know, at least now, that 144.75 is a decent level, whether short or long Apple. We're going to keep our eye on that level, that 144.75 from a few days back, from a nice little area of consolidation here today, right there. All right. And then, no, actually, no, excuse me, not there. Right here is that level. The one, no, one, yeah, 144.75. Yeah, area of consolidation off the open. But yeah, just things to keep your eye on. But again, I actually didn't trade Apple today because I just felt like looking at something different. Like I said, as I'm trading, not only do I have my whatever underlying I'm trading, not only am I looking at the intraday chart, like the 1 minute or 2 minute chart, I'm also looking at the daily chart and like a 10-minute chart, but I also have other charts open that I'm paying attention to, such as the SPY, the Qs, and basically all the FANG stocks, like all the big mega caps that are going to basically confirm which direction the trend is going in overall. So, the SPY, the Qs, Meta, Apple, those are all the stocks that I'm watching on the daily. All right. And like I said, what's been working for me is I've been just trading the same basket of stocks every day. And because I'm trading options and basically scalping options, it's just easier and safer to trade the mega caps or large caps because they have a lot of liquidity. So the spreads during market hours are really close. So you're not getting a lot of slippage on the spreads. And that allows you to go ahead and, even execute market orders either on your entry or your exit. But lately I have been, going with the limit orders for my entries. But if you have to get out of a position really fast when you're scalping options, especially on mega caps, it's okay to go ahead and just execute with a market order because again, the spreads are so, the spreads aren't wide and there's not a lot of slippage, usually maybe like 1 or 2 or 3 cents at the most. And that's, $1, $2 or $3. That's doable. That's doable compared to, trying to trade like low cap, low float piece of crap stock. You feel me? That where your spreads are going to be 10, 20, 30 cents wide. No, that's a huge spread. 10 cents, 20 cents, 30 cents. That's 10, 20 or $30. Because again, when you're dealing with options, the option gives you basically the option, no pun intended, to control 100 shares of that underlying. So 10 cent, 20 cent, that's $10, $20. That type of slippage is basically unacceptable. It's too high. You feel me? Basically, like I was saying, what I was keeping, what I had my eye on the last few days while I was trading Apple was Meta, because what I noticed is that Meta's been a little weaker than all the other FANG stocks, like all the other mega caps that I watch. And also because it's been a little bit weaker and my bias has been bearish and I've basically been selling the rips. And every time that I was watching Apple and the SPY and the Qs and also Meta, I'm noticing, first of all, that it was a little weaker and the swings, like if the market starts heading down, Meta heads down a little bit more, or if the market starts heading up, like it'll head up a little more. So the swings are a little bit, it's giving you more range. But again, it is a large cap, mega cap. So your spreads are thin, and it's just, I found that it was way easier to trade. And looking at this chart, I mean, you could see it. Look, so the rips, you know, all I did to, and again, I was done trading by like here, like by 11 o'clock. And all I did was sell the rips. Look, I watched it, and this is a 3-minute chart. So the 1 minute's going to look a little different. I watched it, and as market opened, again, like I was saying, as market opened, everything was looking bullish. The SPYs, the Qs, Apple, everything was looking bullish. And then look at this first candle right here. So this first candle was over 600,000 shares right here. So I'm watching it. And of course, following my rules, I'm not trading right off the open. I'm going to let a range set in either to the upside or the downside. So this morning, it wanted to go ahead and test the top of the range today, basically. I let it do that. So basically right there. And look, 1, 2, 3, 4, 5. I mean, usually I like to wait a little bit longer, but I seen this candle of indecision right here, especially the wick off the open. It wanted to test the top of the range. I usually like to wait 10, 15 minutes, but what I've been seeing is usually when we test the top of that range, and kind of how I knew it was the top of the range is because look, there's all these wicks on the top. Yeah, this one's kind of like indecisive, and so is this one. But the common theme going into open is there's more wicks on top, basically. So that lets me know everyone is selling into the breakout. They're selling into the strength. Okay? So once I seen it start running out of steam, like I said, first candle, 635,000 shares. A lot. But look, we're starting to see, like, after that, we haven't seen that much volume in one candle all day. And out of all that volume on the first candle, half of it was people selling into the breakout. And then we're seeing more wicks on the top. So that let me know, okay, wick on the top, wick on the top, wick on the top. So I went ahead and jumped in right there and sold the rip, grabbed a few contracts, baited it, got out some here, right? And then left 2 more and left 2 on, and then got out the rest here. And it's easy. Well, it's not easy, but you just have to have a plan and you have to stick to it. You just can't be jumping into markets like, and just jumping in and not having a plan. I mean, I don't know what the metaphor to that would be. It'd be like, I don't know. I'll get back to you with the metaphor, but basically, you always want to have a plan, okay? Whenever you're in the market, you need to have a plan. You can't just be jumping in, waking up at freaking 9:30 and jumping in the markets and just looking at whatever stock has a lot of volume and trading. Like that may work once or twice or even 3 times, but that is not a plan, and it's not going to be sustainable over the long run. All right? But yeah, sold the rip, baited it, got out, 3/4 damn near here, got out the rest here. Waited. And then, like I said, waited to see what was going to happen. Then I seen it dip down here. I guess it was trying to kind of give us the bottom of the range, which if in hindsight, at least for a few hours, that was the bottom of the range. I seen that. All right, I seen it starting to run up, and then I waited to see what was going to happen around VWAP. And VWAP, from an intraday perspective, you can use that as support or resistance too. Along with VWAP, the 120s right there. I'm watching it to see if it's going to break out into an uptrend, which would mean crossover VWAP in the 120 and keep going up, or reject off of VWAP in the 120. And once I seen it starting to reject, I went ahead and grabbed more and faded him down, scalped him to here, got out. The market was bouncing up. Again, I'm watching the SPYs and the Qs and everything, and Apple. by you watching the SPY, the Qs, and Apple, those three underlines are going to basically more than likely tell you the direction of any other large or mega cap stock. Maybe 9 times out of 10, unless a certain stock or sector has news or something like that. In that case, you have to take that stuff into consideration. But being that there was no news or anything, I'm watching it. And right around this time, I'm seeing not only the SPY, but the Qs and Apple and all the large and mega caps start like topping out. I basically seen a bunch of topping action. So I was like, all right. And then look, you see the wicks on top. What are all these candles have in common? Yeah, they're chopping around. They're trading sideways. They're above VWAP. Look, Meta's trying to break down, but they keep buying it back up. Look, down the VWAP. They bought it back up. Down to the 9, they bought it back up. Here, it just consolidated sideways. It tried to bounce. They sold into the bounce. Here, a nice little higher high, a higher low, basically a nice bullish looking candle with a higher low and a higher high. But they all have wicks on the top. So that lets me know everyone's selling into the bounce, into the weakness. And then as we start putting in lower lows, I see it starting to get weak. All right. It tried to sell off. They bought it back up. Look where it bounced from, the 120 in VWAP. Again, that's why I use that 120 SMA as my long-term directional indicator, because 9 times out of 10, if your price action is above the 120, it's still kind of bullish, if you ask me. Now, what really makes it bullish is if you cross over the short term and the long term. But you're not going to get that every time. But look, if you're just going from here, look, we've already crossed over the 9. We've crossed over the short term. Now we're crossing over VWAP and the long term 120. So at that point, it's safe to go long. And that's why I use that 120. It's kind of like confirmation. When you cross over the short term and the long term, that's confirmation to the upside, validating your bullish thesis to the upside if that's what you have. But again, like I said, I'm not buying any dips in this market condition. I'm just selling the rips, basically. Yeah, yesterday I flipped long because Apple was just looking too strong, and I wanted to join in on that uptrend. But normally in this type of market condition, I wouldn't. And so again, all these candles have the same thing in common. They're chopping around under a resistance, and they have a bunch of wicks on top. And the market is overall in a bearish trend. So once I seen this weakness, I went ahead and sold the rip again. Faded it down here. Scaled out right here. Scaled out one more here. Got out the rest down here. And I'm done trading for the day at that point. You feel me? That's it. So you just have to be aware of your levels, be aware of market sentiment, watch the price action, have a plan, stick to your plan. Once you have all that, then the only thing that's left for you to do is execute your plan. And you're just waiting for the price action to get to your levels to execute. You're not jumping in because a candle looks bullish or bearish. You're waiting for the price action to get to the level, and then you're executing. And look, I mean, that was perfect right there, because shit, right after that, look at this shit. Excuse my French, but look at that. I mean, if anyone was bullish or, had the guts or the conviction to go ahead and go long right there, that was a decent move. Look, 139.40s to what? 142.30s? I mean, that's decent right there. But again, just me in this market condition, I'm not really trying to buy dips. You feel me? I want to trade with the trend, and the overall trend is down. So again, that's why I'm just selling the rips. And I gotta tell you, like, when I first started trading, like, my bias was always bullish. You feel me? Because that's just the first thing that you learn when you start trading. I started like studying and dipping my toe in the water. Around those times, everything was bullish. It was easy to trade then. But, once market conditions change, you need to be able to adapt. If you want to be able to make money every day in the markets, you can't just be, I mean, you can, if you're like, you can just be bullish, if you grab the watch list and you know what stocks have catalysts and a lot of volume. I mean, something's running every day, but, overall, you need to get more tools in your tool bag. All right. So, in a bearish market sentiment and a recession and downtrending market, a nice tool to have is a way to go short, basically, to make money on the way down. You feel me? And in this type of market condition, that tool is paying off decent. You feel me? So just again, just trying to touch base with you guys and let you know what's going on in markets and what happened for me, anyways. But looking at this chart, I mean, it really doesn't matter. Like, you could have been bullish or bearish on this chart. It just depends on your outlook and what you want to do. But both bullishness or being bearish was a valid thesis today on Meta, because you could have been buying the dips, scalping to the upside. Look, right there to there, there to there, there to there, there to there, there to there. But in this market condition, I'm more comfortable selling the rips, which is here to here, here to here, here to here, here to here. But you could have made money either way. So again, it's just all on being prepared and doing your homework, doing your technical analysis and creating a plan. That's basically what's key. Creating your plan and sticking to your plan. So, honestly, it doesn't matter if you're bullish or bearish. This is a prime example of that. I just happen to be bearish and I was able to capitalize. But I'm sure there's millions of people that were bullish and they capitalized as well. So you just have to be able to remain market neutral and, again, let the range develop and trade within the range, but also keeping your eye on the overall market, which you can look at the dollar, you can look at the SPY, the Qs, Apple, or all of them. I try to look at all of those things and formulate your plan and execute. All right. But again, it's your boy E coming at you with another one. Just touching base with you guys to give you my perspective on the markets and what my plan was and how I executed that plan and the thesis behind it. But again, a person could have had the opposite thesis as me and still made bank as well. So again, it's just it's just the little nuances of the market. And again, it comes down to screen time. Time in the market is always going to trump trying to time the market, because you can't time it. No one knows. So you just have to put in the work. And by putting in the work, you can take courses, you can watch videos and tutorials, you can read books. I've done all that. That's part of it. But after that, the main thing that is going to elevate your skills as a trader and your equity curve is screen time in the markets, watching price action. That is the main thing and the most important. All right. But again, it's your boy E coming at you with another one from Finance Solutions. Don't forget to hit that sexy like button and subscribe, hit the bell, and get the hell over to my Patreon and Discord to sign up for that daily morning briefing and watch list to gain that edge, brethren. Peace.